Hello everyone. Welcome to the Stock Minds web channel. Atour Lifestyle Holdings, Nasdaq ATAT, has emerged as a standout among Chinese-listed U.S.-traded stocks. Known for blending a lifestyle-driven hospitality brand with retail extensions, the company continues to impress with strong top-line growth and expanding margins. While the stock has seen solid appreciation recently, its valuations indicate room for further upside, supported by analyst targets and future growth estimates. In this video, we will dive into Atour Lifestyle recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Atour Lifestyle. Founded in 2012 and headquartered in Shanghai, Atour Lifestyle builds premium hospitality brands across China. Operating over 1,727 hotels and nearly 195,000 rooms by Q1 2025, ATAT runs multiple footprint models, notably managed, a hybrid franchise ownership, and leased hotels. On top of room revenue, Atour has scaled a retail business, leveraging its hotels as immersive showrooms offering lifestyle products, particularly in its Atour Planet Sleep brand. Atour Financial Performance. Atour Lifestyle Holdings reported strong financial performance in Q1 2025, highlighted by a significant year-over-year revenue growth of 29.1%, reaching $262.5 million, compared to $203.4 million in Q1 2024. However, earnings per share (EPS) for the quarter came in at 24 cents, slightly down by 9.52% from 26 cents a year earlier. On a trailing 12-month TTM basis, the company demonstrated robust growth, with revenue reaching $1.06 billion, an impressive 42.59% increase from $742.4 million in the prior year. TTM EPS also improved significantly, rising 27.55% to $1.25 from 98 cents in Q1 2024, signaling overall profitability momentum. Atour maintained healthy margins, including a gross profit margin of 42.79%, net profit margin of 16.41%, and a free cash flow margin of 15.88%, indicating operational efficiency and strong cash generation. The company's return on assets stood at 15.93%, while its return on equity was a notable 44.8%, reflecting efficient capital utilization. Furthermore, its debt-to-equity ratio remains relatively conservative at 0.54, suggesting a balanced capital structure. Over the past 5 years, Atour Lifestyle has been able to grow its revenue at a 45.4% CAGR, while net income and free cash flow have also grown rapidly. Atour Fiscal 2025 Financial Forecast. Looking ahead, analysts forecast continued growth, with full-year 2025 revenue expected to reach $1.29 billion, a 28.98% increase from the $998.76 million recorded in 2024. Non-GAAP EPS is projected to rise 24.83% to $1.62, up from $1.30 in 2024. Analysts maintain a strong buy rating on the stock, with an average price target of $38.35, representing an 18.36% upside from current levels, and a high-end target of $41, indicating potential gains of up to 26.54%. ATAT Stock Price Performance and Valuation. At the time this video was created, Atour stock was trading at $32.40 per share. Atour Lifestyle Holdings has delivered an impressive stock performance over the past year, with its share price rising 77.7% to $32.40, significantly outperforming the S&P 500's 11.8% gain during the same period. Since its IPO in November 2022, the stock has appreciated by 151.5%, again surpassing the S&P 500's 52.2% increase, highlighting strong investor confidence and consistent growth momentum. From a valuation perspective, the stock remains attractively priced considering its growth potential. It offers a dividend yield of 1.39%, providing additional income for investors. Its price-to-sales (PS) ratio on a trailing 12-month TTM basis stands at 4.06, while the forward PS ratio improves to 3.32. The non-GAAP price-to-earnings (PE) ratio is currently 34.22, while the forward PE drops significantly to 19.23. Additionally, the price-to-free cash flow (PFCF) ratio is 21.01. Based on Fiscal.ai data, if we look at the valuation since 2023, the forward PS is slightly below the average, the forward PE is in line with the average, and the PFCF is below the average, suggesting potential undervaluation. Atour growth potential. Atour Lifestyle growth prospect remains robust, driven by several factors. 1. Hotel network expansion. Atour's expansion strategy remains aggressive and well-positioned for continued growth. The company opened 121 new hotels in Q1 2025 and maintains 755 managed hotels in its development pipeline. Management has set ambitious targets to reach 2,000 hotels by year-end 2025, with plans to add 500 new properties throughout the year. The company's hotel portfolio diversification enhances its market positioning. New product launches include Atour 3.6, Upper Mid-Scale, and Atour Light 3.3 Mid-Scale, targeting different customer segments and price points. This strategic segmentation allows Atour to capture a broader market share while maintaining pricing discipline across its network. 2. Retail business innovation. The retail segment represents Atour's most significant growth opportunity, driven by innovative product development and brand strength. The company's Atour Planet initiative focuses on sleep enhancement products, with the Deep Sleep Memory Foam Pillow Pro series achieving over 6 million units sold. The March launch of the Deep Sleep Comforter 2.0 Summer Edition generated over RMB 100 million in GMV within 48 days. This retail success reflects Atour's unique positioning as a lifestyle brand rather than a traditional hotel operator. The company leverages its 96 million registered members, up 35.4% year-over-year, to drive cross-selling between hotel stays and retail purchases. 3. Industry leadership. Atour has established itself as the leading upper mid-scale hotel chain in China by room count. The company's market position benefits from its focused strategy on the mid to premium segment, avoiding the commoditized economy hotel market while remaining accessible to China's growing middle class. The company's operational metrics demonstrate industry-leading efficiency. Despite challenges from market volatility, Atour maintained a 70.2% occupancy rate and RMB 418 average daily rate in Q1 2025. While these metrics declined from prior year levels due to market pressures, they remain competitive within the industry context. Risks to consider. While Atour Lifestyle stock looks attractive, we should be mindful of potential risks. 1. China economic slowdown. China's economic challenges, including a property crisis and high youth unemployment, may reduce consumer spending on travel and hospitality. A potential economic slowdown could weaken demand for Atour Lifestyle Holdings hotel and retail services, impacting revenue growth. As Atour relies on discretionary spending, these macroeconomic headwinds pose a significant risk to its performance in the competitive Chinese market, particularly for its upper mid-scale hotels and niche retail products. 2. Industry competition. The hospitality industry is highly competitive, with major players like Huazhu Group and Jinjiang International dominating the market. Atour Lifestyle Holdings has established a presence in key urban centers across China, operating over 300 hotels in 68 cities. Despite this, Atour holds approximately a 2.5% market share in these urban areas, reflecting the intense competition it faces from larger, more established hotel groups. 3. Geopolitical and regulatory risks. As a China-based company, Atour Lifestyle Holdings faces geopolitical and regulatory risks, including heightened tensions and stricter oversight of foreign-listed firms or data privacy regulations. These factors could disrupt operations, increase compliance costs, or negatively impact investor sentiment toward Chinese ADRs. Such uncertainties may affect Atour's market perception and stock performance, particularly given its reliance on the Chinese market for its hotel and retail operations. Conclusion: Atour Lifestyle Holdings presents a strong investment case backed by robust financial performance, consistent growth, and attractive valuation metrics. The company has demonstrated impressive revenue and earnings expansion, with Q1 2025 results showcasing solid year-over-year growth and healthy margins. While investors should remain mindful of risks such as market competition and geopolitical factors, Atour's growth momentum and financial strength make it a recommended stock for long-term investors seeking exposure to the evolving Chinese hospitality and lifestyle sectors. But remember, this is not a financial advice. What do you think about Atour Lifestyle Holdings? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.